Hello, welcome to Todd Miller TV, joined here today with Troy Weatherly with Guaranteed Rate Mortgage. Troy, thanks for being here.
Thank you.
Okay, so back in the early 2000s when interest rates were starting to go down, people were doing refis. And the hesitation for a lot of people was that their mortgage insurance increased, their principal balance increased, and maybe they only got $50 knocked off the payment. So it was a lot of hassle to save $50 a month.
Right.
I understand there's a way now, like what do you tell somebody now who maybe got an FHA loan 3 years ago when interest rates were higher, like maybe 5.5%, 6%, and they're seeing out there that their interest rates are way lower? Like, how can you help them?
Yeah, that's a great question, Todd. So if you bought an FHA loan and it was secured before May 31st, 2009, FHA has recently announced a change to their structure in that refinance. Under the Streamline Refinance program, what used to happen is you would have to take the newer monthly mortgage insurance premium rate, which has gone up over time because more people have used the FHA loan, so they've increased the insurance premiums.
Okay.
So what was happening was, sure, it was great, you could knock down your principal and interest payment with these lower rates, but your mortgage insurance would double, thereby negating all your savings and making it not very feasible to refinance the house. But now that they've announced this change in the structuring of the mortgage insurance, if your loan was acquired before May 31st, 2009 by FHA, you're going to get the reduction in interest rate.
Okay.
Rates are in the 3% right now, but then you're going to be grandfathered in under the mortgage insurance premium that you had, so there will be no increase to your monthly mortgage insurance, so you get the full benefit of the savings.
Okay, so what's the downside for somebody who got a loan 3-4 years ago, FHA, from doing this? Like, is there any downside?
Well, I guess the downside would be for the banks, because the banks make money on interest, right? So
right.
When you restructure and refinance your loan, that's less money for the bank.
Why do they do it then? Like, why would they go and just give somebody a lower rate?
Well, home retention. You know, especially in the Vegas economy where you see that property values are declining, and an FHA appraisal, an FHA refinance does not require an appraisal, it lets the homeowner feel better about staying in their house, keeping the property, getting the benefit of a lower monthly payment, and they can thank their bank for allowing them to do that.
Okay, so they do it for customer service and to keep the people, because I think what you're saying is the banks have figured out that people will keep making the payment and make it longer if it's a smaller payment.
Correct.
Versus, and maybe an investor, like maybe somebody is living in a house, and because now they have a lower payment and they move, instead of selling the house and that loan goes away, they keep paying the loan, they turn it into investment property,
right.
And because the loan is only this much, they can get this much in rent, they have this difference of profit that they can make.
Right.
So but the bank would rather just have them keep making the payment than sell the house completely and then maybe them not getting that next loan.
Right.
Okay, if somebody wants to talk to you about like getting a refi and using this program where it sounds to me like a smoking deal, how do they get in touch with you?
Sure, they can just give me a phone call directly on my cell phone at 702-308-9821 or email me at troyweatherly@troyweatherly.com.
Sweet, man. That's awesome.
Thanks.
All right. So Troy's the mortgage guy. He knows what he's talking about. And this program is just, you know, there's a saying out there, if it sounds too good to be true, it is. But in this case, I have not seen any downside with it. It's a smoking great deal. So give him a call. That's my update, and hope to see you on another video. Thanks.